open. We're also waiting for earnings from a number of major U.S. players. And I want to bring in Mark Sebastian, who's going to be joining us on the desk to go through some of these names. Mark Sebastian, founder of Option Pit and CIO of Karman. Mark, always great to be with you. Before I get to your perspective, first I want to break these numbers that we're getting from Airbnb. They're just coming down right now. Revenue coming in higher than expected, $2.14 billion. The market was looking for revenue of $2 billion. As for the outlook, and we know that this is where stocks can live or die, I would say that this falls short of expectations. The outlook for revenue in the second quarter is $2.68 billion to $2.74. The estimate is 2.74. So at the top end, at the midpoint, they are definitely missing expectations. Profitability in the first quarter for Airbnb coming in better than expected. So you have this story for Airbnb where the first quarter seems fine. It's a beat both on revenue, profitability, gross bookings, which is also very important when you're a company that does business this way, also coming in higher than expected. But I wonder how the market's going to react to that outlook for the second quarter coming in below expectations. Nights and experiences booked also a bit down. What do you think, Mark? How it's going to go down?
Well, it's down $8 right now. That's been a trend for this earnings cycle. It's not what you've delivered; it's what you're going to deliver. We've seen multiple stocks have similar outcomes when they deliver on their actual earnings, but don't give the market a bullish forecast. And the forecasts, in order for stock to go up, really have to beat those expectations that were already out there pretty handily if the stock's going to move higher. And Airbnb failing to do that, thus you see the stock down about $8. I'll be interested to see whether that continues. It kind of carries along with the trend we've seen in travel. Look at Expedia, look at Trip. They've both been just absolutely abysmal. Airbnb now joins them.
Let's talk about, I'm glad you brought up that broader trend because, TripAdvisor got hammered today, a third of its value gone. And I get there's other issues there with TripAdvisor, but Expedia, to your point, Booking Holdings. Is this all just pandemic unwind?
I think it's people a little bit more worried about their pocketbook. I think it's inflation affecting things because you look, travel is kind of a luxury for a lot of people. And if we're not booking Airbnbs, we're not booking on Expedia, then what does that tell you about the consumer? Maybe they're a little more nervous than we think, even though the economy here in the United States continues to grow. Inflation is biting a lot of people, and thus you're seeing bookings fall. People are worried about their jobs a little bit, and that's the trend. If travel is a leading indicator, which it kind of is, that doesn't bode well for the next quarter.
That's got to hit a lot of things, right? Not just an Airbnb, but that's got to hit the cruise liners. That's got to hit the airlines. Do you think that's
major
being priced
hotel
in?
brands? Yeah, major hotel brands, airliners, cruise liners. It's kind of bearish across the board. We've been seeing in some of the airlines some pretty aggressive put buying over the last week or two already. So yeah, I think that the travel maybe it's the canary in the coal mine for the United States economy. Airbnb melting lower now, down about $13. So it's getting worse.
We've got another high flyer to break for you. That's ARM Holdings. Remember that IPO was very successful. ARM Holdings, a designer of chips and other IP and software. I'm seeing the shares dropping in the post-market, even as their fourth quarter sales came in better than expected. So first quarter sales coming in better than expected. And I'm just going through fourth quarter, I don't know if I said that. Fourth quarter sales coming in better than expected. Going to the outlook for Q1, that appears to be higher than expected, even at the lower end of their forecast is significantly above where consensus was. Their outlook for earnings also significantly higher. This is again for Q1, so a forward-looking forecast. 2025, they've given a full year forecast for earnings. To do some quick math, I think that's, I would call that, Andy, I don't know if you're looking at ARM too, I would call that roughly in line.
It might be lower. Bloomberg is characterizing it as a lukewarm revenue forecast.
For the year.
Yeah, at the top end, they might match for sure. Or
yes,
it might
I
be
see that
slightly.
now. The revenue forecast for 25 is a little bit light, and so that's why we're seeing the stock pull back.
I think so, yeah. They're saying revenue for the current year, fiscal 2025, will be 3.8 billion to 4.1 billion, and the street was at about 4 billion. And of course, the people are watching for the peak here. When will this manic spending on AI hardware and chips, when will the growth start to flatten off?
And yet, it just went public in September at $50, $51.
Shares are up.
It's already doubled.
It's a double, yeah. This year alone, the shares are up 40%, yeah.
I mean, Mark, it seems like we're just I'm going through earnings these days just to say, what's the one bad thing, right? There's so many positive things in ARM's results. What's the one bad thing? And that's what investors pick on.
Well, and if you look at the growth in a lot of these tech stocks, just exponential continued growth is priced into a lot of these names. ARM isn't $100 if there isn't a lot, and I mean a lot, of future growth built into that stock price already. And for them to come in with just kind of inline revenue is going to be disappointing. We saw that in AMD, where they came out with a pretty rosy forecast. It just wasn't rosy enough. Taiwan Semiconductor. So far, the chip sector has had a really disappointing quarter, and ARM is just kind of continuing that trend. All eyes are going to be kind of staring at NVIDIA. If NVIDIA comes in a couple of weeks and they're weak, that is going to make for a very bad June for the market.
NVIDIA, you're right, reports at May 22nd. We are talking about ARM Holdings forecasting sales growth of about 26%, which, I guess is not bad, but it's a little bit of a slower growth story. And it wasn't an AI darling, Mark, right out the gate, right? It was kind of a slow growth, established business. And then after its latest set of results, its first set of results, I believe it was, then it really started to take off, and they talked about the AI narrative.
Yeah, I mean, that's been kind of, look at every major chip manufacturer, chip designer, chip fabricator. That's kind of the focus of what they're talking about, because that's where all the chip demand is. Crypto and some other things along those lines. But the big driver is data centers and AI, and that is why that's the narrative that all of these companies are talking about. Because if I'm a chip maker and I'm not in AI and I miss the boat, I'm Intel. And take a look at that one. How's that going for them? They're racing to get back in. Apple's kind of a similar story. If Apple wasn't buying $110 billion of their own stock back, it'd be trading $160, maybe $150. So if you're not on the AI boat, you are not going to be treated very nicely by the market right now if you're in chips, if you're in technology. And ARM is talking about that narrative, but the fact that they're not showing exponential growth, right? Just lots of growth isn't good enough. It needs to be absolutely way beyond our expectations for these companies to continue to price in the earnings multiples that they're pricing in.
ARM down 9%, Airbnb down 8%. And again, the issue there is the forecast predicting a bit of a slowdown in the second quarter before the crucial summer travel season. Do you like either of those, Mark? Are you buyers of either ARM or Airbnb?
No, those are not two that I'm playing around in too much. If I was going to be in travel, I'd probably look a little bit more at the hotels. They're actually kind of getting into that game. They're trying to play Airbnb game, plus they have the properties. You read about some of what's going on in California, some of what's going on in New York, where there's some backlash against these investors, and you have to wonder whether there's some regulatory risk associated with Airbnb as well. ARM, obviously interesting, but at $96, I think there are more interesting chip plays than ARM.
Am I overreacting to stitch all of this together? Weakness in Airbnb, maybe you can call it a little bit of cooling demand in Uber. Even take Shopify, which forecasted a bit of a slowdown in their growth, and marrying it to a McDonald's, to a Starbucks. Like, is all of this rolling together and painting a picture of a slower consumer, or am I reaching?
I don't think you are. I think that all adds up to a consumer that's being pushed, right? Who did have great earnings? Exxon and Chevron. Why? Because gas prices are going up. Firms that were able to pass through these price increases on something that is a sticky in demand, like gasoline, they did fine. It's where there's elastic demand, things like restaurants and travel, where you're seeing some pain. Now, there's a little bit more rolled up into McDonald's. Some of that's coming out of California, where people are just like, I'm not paying $20 for a Big Mac and fries. I just won't do it. And so you do have some regulatory issues on the restaurant side. The higher minimum wage and the higher food prices. I think the higher food prices on their own, the consumer could handle, but you roll in that higher wage that they have to bake into the price. And, I love Chick-fil-A as much as the next person. I love, Burger King or Tim Hortons as much as the next person. But I'm not going to pay $12 for a spicy chicken sandwich. It just isn't going to happen. And I think that's some of the backlash you're seeing.
Especially when it doesn't come with lettuce. At Chick-fil-A, if you want it with lettuce, you have to pay more. Yeah.
For lettuce.
For lettuce and tomato, like stuff that comes on Wendy's. Anyway, I'm sort of a spicy chicken connoisseur. So I'm with you on that, Mark. Well, maybe in California they'll pay if it's with Bitcoin. And we're getting a real read of how crypto is affecting Robinhood. Andy, why don't you break those numbers for us?
Yeah, that stock jumping 40% this year as of today. And let's have a look at it in the pre-market. Second straight quarterly profit. Of course, Robinhood, that trading platform that played so much in the swarm trading, meme trading phenomenon. Net income coming in at 18 cents a share for its first quarter. That was 3 times the analyst estimate. And crypto has been fueling this company. Crypto revenue surging. Higher interest rates also. I'm not sure why that would help, but that's fueling revenue growth. So it looks like shares in Robinhood doing just fine.
Yeah, that crypto revenue is surging. You're right, up 232%. It was higher than expected. Their monthly active users also up.
They are, though, in the sights of the SEC. Remember, they just got the so-called Wells notice saying that they could face an enforcement action. The regulator, the SEC, says most tokens are subject to their rules and that the platforms where they trade should be registered. Robinhood said it was disappointed.
Let's see if we can put together a little meme portfolio, though, Mark. GameStop, Reddit, Robinhood. You want to gamble your future on that? Hood is an interesting one because you look at their businesses, right? Crypto is taking off. You're getting more and more interest. The crypto ETFs have boosted that business. I am assuming in the next few weeks, the SEC is going to greenlight options on crypto ETFs. That is going to be a payday for Robinhood. The one area where, because of their business model, I think they miss out is on zero DTE, which is in the option side, 0 days to expiration. If you look at S&P 500 options, about 2 million
options that expire today are trading in that thing, and Robinhood, because they don't let people trade index options on the platform, they're missing out on some of the transactions there. But you look at what they're doing on kind of getting into the investment side, the potential boon on crypto ETF options, the increase in option pricing and stock demand. And, I actually think Hood is an interesting long-term investment.
Long-term? You don't think this crypto trade is just a flash in the pan? I mean, we've seen this so many times. Crypto prices go back down, so does the business.
Right. The direct earnings are definitely going to be continue to fluctuate as they do with all firms. But the business model, the kind of continued growth in equity trading and options trading, I think that is going to play into Robinhood's hand. I like them as an acquisition target more than something that that 10 years from now is going to be. Who would buy them?
Yeah.
I think Goldman would love to buy them.
Wow.
I don't know if they could, but I think Goldman would love to buy them. I think any of the major houses. The whole issue that you have with buying Robinhood is the internalization of all that order flow. Right now, Citadel does what, 80% of the business that Robinhood. If you press a button on Robinhood, you're trading with Citadel. Any firm would want to take that in-house. It's just whether you could get over the regulatory hurdles. But yes, I think there are a lot of firms that would want to own Robinhood and get their hands on that flow. Heck, I mean, if I could get into the market making side and just take the other side of every Robinhood trade, you wouldn't be talking to me. I'd be back at my old desk in Chicago, just making markets on the back end. But that's a pretty hefty